Papa John's, the stock in the green after news that the company's founder, John Schnatter, will resign from its board, closing months of tension in the management ranks. Schnatter still owns nearly 1/3 of Papa John's shares. He's going to help the company identify a new independent director to take his place. He also agreed to dismiss a lawsuit related to his exit from the chairman's seat. Yahoo Finance's Heidi Chung is here with me. Heidi, there has been months and months of controversy surrounding John Schnatter. He's finally stepping down. And actually, he has a lot to gain here because he does own 1/3 of the company in terms of the stock. So if Starboard can turn things around here, Schnatter will profit.
Exactly. And this has just been such an expensive and really, really long and painful battle between the company and the founder. Specifically back in August, the company said that they were going to spend about $30 million to $50 million to rebrand the entire image. And this has started really at the end of 2017 when Schnatter took on the NFL and said that Kaepernick was at the core of the Papa John's flat sales. And Papa John's also just came off of its worst annual sales in nearly a decade. The pizza space is really heated right now. There's so much competition. Domino's also didn't post very good quarterly results in the fourth quarter. And Yum Brands as well. Pizza Hut has continued to be a lagger. So there's a lot to do here. It's not just Schnatter, but just Starboard needs to get involved with a lot of different aspects of this business to turn it around.
You know, Schnatter held on for a long time when a lot of people said that he should really step away as he is now. What do you think created the catalyst or the pivot point for him to do it at this time?
I think he realized that he wasn't going to win at this point. He tried to make another investment in this company, but Papa John said, no, we're going to let Starboard come in, the activist investor, and invest $200 million into the company for a 10% stake. So at that point, he really there was no hope left for him. He was holding on for dear life, and it just wasn't working.
This is interesting because as he was sort of hanging on by a thread, he allowed an opportunity, if you will, for some of the competition. You mentioned Domino's, but there's also Pizza Hut. And I don't necessarily think that those companies took the bait the way they could have during this period of upheaval at Papa John's. So when, we're looking at this company sort of reemerging with the $200 million from Starboard, the investment and new management, are they all on a level playing field here, or is somehow Papa John's more disadvantaged?
Jackie, you bring up such a good point because a lot of analysts going into Domino's earnings, they wanted to see solid proof that Domino's was able to steal market share away from Papa John's, but absolutely no real proof of that. And our very own editor-at-large, Brian Sozzi, who we talk about all the time, sat down with Papa John's CEO Steve Ritchie not too long ago, and it seems like Ritchie is really focused on a solid turnaround plan here. They're looking at new items that they're launching this month, as well as promotional offers. They're going back to that $6 pizza promotion that really made them famous, as well as tapping into social media influencers to make their image seem more likable, bring in those millennial customers, the newer and younger customers.
All right, Heidi, thanks for that.